Welcome to Moffat on Money. I'm Clay and glad to have you. Glad to be with you. Appreciate you tuning in. This is the fifth retake of this particular video. A couple of them I've trashed because I stutter too much, and some of the other three are due to Ellen. She says I've been too confusing, hadn't explained things well enough, whatever. And so hopefully this will pass her muster. And if you enjoy it at the end, make sure you give her some love. If it's something's confusing or doesn't make sense, then it's my fault. But glad to be here. We're going to revisit well-known, much loved cryptocurrency exchange FTX and its visionary leader Sam Bankman-Fried. Some new interesting info has come out the past few weeks concerning FTX's involvement with some obscure exchanges. Exchange is just a place where securities are bought and sold, traded. Some Kazakhstan and Russian oligarchs. Kind of sounds like a hell of a good soap opera. So we're going to kind of dive into that and give you a little bit more background on it. Now, also, if you will, YouTubey things, like, subscribe, help keep us going. If you haven't subscribed before, please do. If you have subscribed before, tell your friends, family. Now, a week or two ago, the Wall Street Journal published an article on the FTX Alameda wreckage. So today we're going to try to update you with some of the latest chaos, throw in a little mystery, a little intrigue, all with finance, of course. So it's going to be a little bit detailed, but hopefully it'll be informative and interesting and give you a little bit better understanding of what actually went on during this debacle. Remember, in some of our previous videos, we talked about one of FTX's most significant purchases, a Bitcoin miner named Genesis, who had operations in Kazakhstan but was registered in Cyprus. Kind of an interesting combination there. It was a huge investment, FTX's biggest, and dwarfed all other assets in its portfolio. So they spent $1 billion. For what? Well, first of all, it was a Bitcoin miner. Now, what's a Bitcoin miner? Here's a picture of a mining operation. I believe it's either in Kazakhstan or China, but they're all similar. And you can see on the wall the thousands of mining computers. They're just basically little computers without a screen. It's got a super fast chip, a small hard drive, and that chip just cranks. And you can see the electrical cables here. It's a relatively electricity intensive process. That's one of the major costs. Of course, the hardware and all is not very cheap. Now, a Bitcoin miner. What does a Bitcoin miner, what actually is Bitcoin mining? Now that you've seen the hardware, what does each one of these machines do? Basically, each one of these machines competes. It competes to solve a problem designed by the Bitcoin core software. The problem enables that miner, that particular computer, if it's the one to solve it, to write another block of data to the Bitcoin blockchain. So that's how transactions are stored. They're compressed, put into a block, and added kind of on the tail end of the database. So that database is continually expanding, hence the name blockchain. Now, the way the particular machine and the previous picture, you saw thousands of machines. They're all competing against each other and other mining operations, each of those with thousands of machines. It's estimated there's about 1 million nodes or Bitcoin miners in the system. The mining process, how does it work? They all want to, if you look at this graphic here, they all want to write the next block of data. And a new block is written about every 10 minutes. Each block contains basically what's called the Merkle root. It's if you've ever compressed a file using zip, that's kind of what a hash is like. It takes data and compresses it. Well, the Merkle root is is a small little string that contains all of the transactions. Now, the transaction, every time somebody uses Bitcoin, either buying or selling, it goes into kind of this core pool or mempool. The miners will extract some of those transactions, a big block of those transactions, and try to hash them into smaller data. It will add this bit of information called the nonce. Nonce is short for number used only once. Okay. It's just a random number. They start at 1, keep incrementing it by ones to try to solve the problem. So it takes all the data compressed in the Merkle root. It takes the previous hash of the solving the problem. The miner will take transactions which haven't been written to the database yet. It will use this nonce, incrementing it by 1 in an effort to solve the algorithm. And it contains basically the header, the key information, like in an email. You have somebody's name, address, their IP address. The key bits of information is called the header. So it takes the header of the previous block and embeds all these 3 things into one hash, kind of a zip of a zip, if I can go Cliff Notes version on it. So this hash is an effort to solve the problem. Now, the problem takes a lot of electricity to solve, a lot of mining power to solve. Once the hash is produced, it can be compared to the problem put forth by the Bitcoin core to see whether or not it solves it. If it doesn't, this target hash, if it doesn't solve it, then the nonce is incremented using the same data, the same previous header, comes up with a new hash. See if that solves it. No. So it's an iterative process. And actually, with all these computers, it's taking like 24 billion attempts to try to solve the algorithm right now. The Bitcoin core makes the problem harder as more and more computers are trying to solve it because it wants to keep to this 10-minute schedule. So if there's more computing power directed toward it, the problem gets harder. If there's less, it gets easier. So the Bitcoin system controls the difficulty of the problem. And you've got all these computers struggling to solve it because if they solve it, if they're the ones who solve it, they get the Bitcoin reward. New Bitcoin is created for every block added, and they get paid. That's how they get paid. That's their goal. So they've solved the problem. They earn the right to add this new block of data, new transactions to the blockchain, where it will be immutable, impossible to change. And if you have some more questions, I think I go into that in a little bit more detail in one of my first videos on crypto, trying to explain the crypto system. But this is just a simple, quick overview of the process. You have these miners, a lot of electricity, a lot of expense in the machine itself, trying to solve a problem. They solve the problem. They earn the right to write the next block and are paid in Bitcoin. Then the process starts all over again with all these million computers trying to solve and come up with the correct hash function. Now, in terms of the cost of mining, the miners themselves, this is a list of some of the more popular miners. And each one of these miners will cost anywhere roughly from, $700 up to $11,000. The more expensive ones are, a little bit more in demand, have a more powerful processing chip. They also cost or take more electricity. Here you can see the break-even price for each of the different miners with 4 cents a kilowatt hour up to 14 cents a kilowatt hour. Now in the US, the average electricity cost is around 15 or 16 cents per kilowatt hour. That's why very few operations are located in the US. Our electricity is just expensive. Most of the operations are located in remote areas of the world where there's an abundance of electricity. There's an excess of electricity. It's why the cost is so low. And you got to keep that in mind too. Now, in terms of the cost to mine, here's a graph showing the, cost per kilowatt hour. And the green is where it's profitable. The red obviously is where it's not. So the break-even point is at about 5 cents per kilowatt hour. Any charge over that, the Bitcoin miner is not profitable, considering the current difficulty of the problems to solve, the amount of electricity it costs, and the competition, which also is known as the hash rate, how many computers are trying to hash the problem. So that gives you a little bit of information on the cost of mining. Now, this all is just background on what Genesis does. What did FTX buy? It bought one of these mining operations. What did they get? What was the aftermath for this $1.1 billion spent? Well, shortly after Sam bought it, Bitcoin price dropped, which means the reward paid to the miner in Bitcoin, the number of Bitcoin's the same, but the dollar value is a whole lot less. So the revenues drop. In addition, the president of Kazakhstan didn't want the miner in his country. He said, "You're using too much electricity," which is really kind of interesting because anybody hear about Kazakhstan's huge economic growth to where their energy costs are soaring and they need this energy? You need to understand it. If the energy in some of these areas is not used, it just goes to waste. It just vaporizes. There's no industry or demand for it. In fact, that's why a lot of the Bitcoin miners locate in those areas. And that's why the price is so cheap. There are some miners here in the US, but what they are basically taking advantage of is very low cost or free energy. How do they do that? Well, anywhere energy is developed, or even at sanitation facilities, what do you call them? Sanitation facilities, sewage treatment plants. Couldn't remember that. They'll have what they call a flare off. They produce this methane gas, and they're just burning it off rather than release it into the atmosphere. Well, Bitcoin miners have come up with a way. They take basically a cargo container, put a couple hundred machines in there, and drop it off next to this burning methane. They then put a boiler over this methane and use it to generate steam, which then propels an electricity generator. So it's pretty much free electricity in that regard. You've got the fixed cost of the equipment, but you can drop off one of these cargo containers filled with the mining machines and use it to mine Bitcoin, taking advantage of the flaring gas. So that's how you get a lot of the low cost energy per se. Boiler and an energy generator is not a huge cost, particularly compared to a couple hundred miners. So we've got the mining process. Well, the Kazakhstan president didn't want the electricity being used. Why? Have we talked recently about a group that wants lower electricity demand? Yes, we have. The World Economic Forum, the Great Reset. And it's funny how this kind of ties in because Kazakhstan's own president is a member of the WEF, even spoke at the last meeting talking about the urgent challenges facing the world. So he takes jobs and revenues, forces it out of his country because it's using otherwise unused electricity. That's visionary leadership right there. That's what the WEF wants, which is just kind of amazing to me. Now, about the $1 billion paid for Genesis, 1.1 billion actually. We find out that this price for a miner, which seems a little high. I haven't been able to do a good valuation of it yet, but It's not terribly out of line with market values. So it turns out in the deal that at least $550 million of the $1.1 billion went to a Kazakhstan oligarch by the name of Rashid Markat. Now, you won't try Googling him to find out more about him. There's nothing out there on him except his LinkedIn page. The web has been pretty much scrubbed from this guy, which is interesting in and of itself. You got to be pretty damn influential to get that done at that level. So you can try Googling guys, see what you find out. Maybe you'll have better luck than I have, but it's pretty clean. Now, Cyprus. Genesis is registered in Cyprus. We've talked about Cyprus a few times. We'll talk about it here again because Cyprus is a key player in FTX, a key geographic region to FTX. Now you're like, what did FTX do, or what was so important about Cyprus? Well, a lot of the companies they buy were domiciled in Cyprus. Cyprus has in finance a very long and prestigious history. It's long been honored as a haven for money laundering, for mafia, for oligarchs, for corrupt governments. Come one, come all, you name it. Hell, even Cyprus citizens think it's the most corrupt government in the world. And here you have a local Cypriot paper. The headline, Cypriots believe their country is the most corrupt in the EU. Interesting. The money phrase is 65% thought corruption had even worsened over the past 12 months compared to the EU average of 32%. So that's pretty strong there. Cyprus coming in hot. Now, after purchasing Genesis at this fairly rich price, Genesis has run into some pretty difficult financial struggles. Obviously, the price of Bitcoin, as I mentioned, has collapsed. Higher electricity prices, higher hash rates, which means more competition. The Kaz president wanted Genesis out of the country to shut down its operations and move them elsewhere. Then you had FTX failing, which was a significant blow. Now, Genesis, the Bitcoin mining operation, is still in business, still a significant asset of FTX. The other Genesis Digital, was a crypto lender. They're the ones that declared bankruptcy, I don't know, a few weeks, a month after FTX did. So they're the ones who are out of existence. But the miner Genesis is still in business. But the story doesn't end there. Turns out that Genesis wasn't the only time SBF was contributing to oligarchs. In 2021, you've been around a while when you keep throwing out 1921. In 2021, Sam purchased a firm known as Zuber, a Gibraltar registered exchange. Now, he bought this exchange for $11 million. Gibraltar, Cyprus. What did FTX get for $11 million? Well, basically, they got a derivatives exchange license in Gibraltar, which then gave them access to the euro markets. It gave FTX the ability to trade derivatives in European exchanges. Not bad for $11 million per se. But, the question is begged, how active was Zuber in Zuber? Where do you get a name like Zuber anyway? How active was Zuber in derivatives or derivatives trading? Once Gibraltar saw the price, saw the firm, the registration, etc., they did a little audit or review of Zuber post-purchase. When examined by the Gibraltar officials, they found out that Zuber had 0 clients and 0 history of trading. No history of trading. Kind of a sweet little deal how you can be a registered licensed derivative exchange and never have engaged in it, never have any personnel engaged in it, never have any personnel running it. So where did this Zuber come from? Same question can be asked, how did it get a derivatives trading license? Haven't seen good answers to that, but we do know that apparently it's a collaboration between a Belarusian oligarch, another oligarch here, Victor Prokopyan, who claimed to be a quote binary options and crypto billionaire, and his partner, who was the son of Russia's main oligarchs, Said Gutseriev. So that's your derivatives expertise right there in a derivative that's nothing more than a scam. Now, first, Prokopyan, which I'm just going to call him Prok. Now, this gets into the weeds a little bit, but bear with me. Prok owns two firms, currency.com and capital.com. Capital is also registered in, you guessed it, Cyprus, and offers CFDs, contracts for difference, and binary options. Now, you're probably wondering what is a CFD and what's a binary option? Well, simply, binary options are a directional bet on a stock price movement. If you're buying a binary option on Apple at 140, you'll buy it for a day, couple days, maybe a week. If Apple at the end of that time closes above 140, you receive a payout. And that payout is a fixed amount. Doesn't matter whether Apple closes a penny or $1 or $100 above. You receive a fixed payout. If it closes at 140 or below, you lose your premium. You paid an upfront premium for this option, and you'll lose that if it doesn't pay off. So that's a binary option. It's not per se a real option. It's closely related to a CFD, contract for difference. Now, the CFD pays the difference between the opening price of a security and the closing price of a security. So there's a wager or a bet on what that will be. It's a little weird. It and binary options are kissing cousins. Both are pretty much scams, not done by normal, well-established, regulated exchanges. So the expertise that FTX bought was in a scam. Now, CFDs are generally traded in currency and foreign exchange and commodities products. So it's not normally on stocks, even though I use that as an example. They've got a wide spread, they've got high cost. They, like I say, in most places are not legal, but where they are legal, it's very weak regulation, almost no oversight. So they're fairly complex structures for regulators to try to control. They're not allowed in US markets because of the opportunity of taking advantage of less sophisticated individuals, people who don't really understand the risk of what they're doing. Now, there's actually no ownership with a security. It's just a wager on the direction of movement, on the direction of the movement of the price. It's a wager against the broker. Again, you haven't purchased anything. You and the broker just have a bet, just like you would a bookie. Not that I know anything about bookies or have ever gambled. That's illegal in my state, so obviously I wouldn't. But CFDs are just, and binary options are a wager with the broker. They're generally sold by what's known as bucket shops. Now, you ask, what's a bucket shop? A bucket shop is just a small group office, not really in a well-established location. Let's put it that way. They're very flexible with their location. They like new office space. And they take bets for these orders based on current prices of currency exchange or commodities. But there's no actual buying or selling of the commodity or the currency. Now, it's somewhat similar to the boiler room. Remember, In a previous video, we talked about the movie Wolf on Wall Street, where Jordan's first job was in a boiler room. You've got this little office in an old strip mall or an old gas station with a bunch of guys on fold-up tables sitting there smiling and dialing, offering people what's known as pink sheet stocks, little mom and pop companies that they've never heard of, that'll probably never develop into anything else. And they make a killing on it by convincing people that what they've got is what they need and what they need to buy right now. That's a boiler room. So bucket shop is somewhat similar, except with a boiler room, generally they are selling pink sheet stocks. Boiler rooms are just selling a bet, a wager. You're wagering with the bucket shop. And a key thing to understand is that the bucket shop, if it's in their best interest to pay you off because they think they can do more business with you, they'll pay you off. But if it's a large bet, something they don't want to pay, they can just close up and move on. The bucket shop literally is playing the bank or the house against the customer. So they can close down that deal anytime they want. And you don't really have any recourse because it's not in a highly regulated environment. I'm not going to say they pay off the regulators, but they pay off the regulators. Now, the CFD industry, as you imagine, is rife with fraud and corruption. It's got ties to organized crime, just like the gambling industry is reputed to have. So this is the kind of expertise FTX is buying. Now, just wait a minute. Wait, you say, or wait, I say. FTX, we're not done. FTX also bought KDNA Financial Services during the same time. And guess where they were domiciled? Cyprus. So how does this all fit in? Well, let's take a look at KDX. Now, here's a report from FinTelegram News, and they actually do a pretty legit job of raising questions or covering the crypto industry. And if you'll notice, this is dated June 19th, 2022, about 4 months before FTX blew up. And they're already kind of raising a bit of an alarm. Broker crypto FTX and SEC regulated KDNA Financial Services. Well, they do show this interesting graphic of FTX's, or what they were able to put together at the time, of FTX's trading structure. You've got the FTX overall, and you look at the little subsidiaries operating under, which we know now most of them were pretty much shell corporations. You've got Zuber Exchange, you've got Four Step, incorporated in St. Vincent, Bahamas, Gibraltar. You're just Cyprus here, KDNA, the much well-known KDNA. So what's the deal with KDNA? Well, they've got a bit of a history themselves, a history that's not hard to find, could have been found relatively easy. Started in 2016 as far as their, publicly known history, with an expose in the Times of Israel. Here it is, where they expose what's known as a binary option scam. That ought to sound familiar. Binary, binomial, same thing. Binary or binomial basically means one or two, 0 or 1, yes or no, on or off, pay or no pay. Kind of you've got only two choices. And they detail it as a scam. Now, KDNA wasn't specifically mentioned in here or directly involved. They just provided services to the main company known as Utrade or Talmor. They had extensive dealings with these binomial options companies. Now, KDA bills itself as a regulated financial firm, regulated in Cyprus, right? Offering services to other financial trading firms. KDNA also operated at least one trading service called FinMarket. Now, FinMarket primarily advertised CFD products. How cool is that? It also described itself as being another binary options shop. I'll go ahead and say binary options bucket shop. If you look, their Instagram and YouTube pages are still up. Here's FinMarket's Instagram. You can see, thankfully, only 5,500 followers. Can't imagine who actually would follow them, but they've got just a series of videos, which seem, fairly well done, professionally done, giving them some imprimatur of legitimacy, possibly. Now, if you look at the fine print in each one of those down here at the bottom, they state that 66% of retail investors lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Now, personally, I think the 66% is a little bit low. I also think it's somewhat of a childish attempt to try to skirt regulations, disclosure regulations, or regulatory issues as they entice uninformed investors to lose their money. Now, KDNA, this is KDNA's operation. In addition to providing services to numerous other binary options bucket shops. Well, FTX, when they bought KDNA, also retained the services of the CEO, Martha Labrador. As the CEO of their new company involved in European trading, she was also the CEO at the time of the questionable trades with U-Trade and Talmor. Now, you look at this and you wonder, well, obviously FTX has some issues with firms they associate. Also hiring issues. I mean, FTX Europe appointed Marios Athendro as the executive director. Now, we have seen Mario before. He was the narrator of all these fine market YouTube videos. He was also listed as their expert analyst. Now, Mario's resume includes a stint at another well-known binary options firm called Alexo. Alvexo was shown to be engaged in a blatant cryptocurrency fraud scheme. Again, here's digging up some old FinTelegram news with Alvexo Group chases consumers with crypto fraud campaigns. And they detail the trades, the narrative, the people involved, on and on. I found this in probably 5 seconds of Googling. You really think Sam couldn't do the same? Or whoever oversaw FTX's acquisitions couldn't do the same? But we're not done with Mario. If you look at Teletrade's videos, they look identical to those from FinMarket, suggesting they were really the same two firms controlled by the same individuals. Well, Mario also serves as CEO of MFX, whose Twitter links the same videos as FinMarket. There's his YouTube site, and with him obviously warning traders not to worry about fear, greed, euphoria, trying to predict the market, living, dying on each trade, because you can trust these experts with binary options. This is just amazing to me. So you've got these fraudulent firms, these fraudulent individuals, or individuals that have been associated with fraud in the past. I don't think they've been convicted of anything yet, but certainly they've been intimately involved with these firms in this history. But let's go back to Proc for a second. His other firm, this basically is discussions of his first firm and relationships. Well, let's look at his second firm, currency.com. It advertises itself, self-advertises, as rated, quote, the best cryptocurrency exchange, according to Blockchain Life Award International. Now, it says it won this award in 2019, so I tried to search it some, and what I found was basically some award meeting in Moscow in 2020. Don't know anyone that went, don't know anyone that spoke, never heard of it before, but don't let that deter you from participating in currency's tokenized Apple shares or gold shares or other tokenized securities shares. Why buy the real security when you can buy a token from a Kazakhstani oligarch domiciled in Cyprus? This just amazes me. There's people actually out there buying this stuff, but I'm not one of them, and I strongly encourage you not to. Even though, forgive me, what could go wrong with an award-winning trading platform at up to 20 times leverage buying tokens which represent zero interest in the stocks they're associated with? What could go wrong? Now, currency is registered in Gibraltar and the Caymans as well. One should note that Zuber, Four Step, remember the other one of the other companies in FTX's empire, and currency.com all list their offices at the same address in St. Vincent. Now you ask, now that's interesting, you may say. Just what exactly does their office look like? It's got to be a big, huge, sprawling empire to handle all these complex operations and the administration thereof. Well, there it is in all of its splendor and glory. Now, to be honest, those aren't the only three companies registered there. There are other binary options and crypto firm registered at the same address. As of Forex, Olympic Trade, USP Capital, MXC Foundation. There's a company called Point Play that is owned by, it's kind of an interesting arrangement. It's owned by a Russian with Romanian citizenship who's hired mostly Ukrainian employees, according to CoinDesk. You doubt me? Well, here's the article. CoinDesk is again a relatively legitimate information source for crypto, and you've got their detail on the company, which to me is kind of interesting. Russian, Romanian citizenship, hiring Ukrainians. That just sounds like an interesting setup. So you've got the reach and influence of one oligarch. How about the second one I mentioned, the son of the Russian oligarch, Said Gutseriev? Now, he's the son of one of the wealthiest oligarchs in Russia, has extended interest in mining and oil operations in Russia. Now, the interesting thing to me about Said was that it's rumored that his father spent $1 billion, billion with a B, on his wedding. The entertainment featured Sting, Enrique Iglesias, Jennifer Lopez. They all provided the live entertainment. I can see where the $1 billion went. Now, Said has always been closely aligned with Proc. He was partnered together in Zuber, in Capital, and Currency, and a number of other operations. But it appears, at least on the web, that Proc bought him out and removed mention of him in or after the invasion of the Ukraine. How many of y'all think he actually made a clean break? How many of you think he didn't have any further need or interest in the financial operations afforded his family in Cyprus? I mean, what's a Russian oligarch interested in Cyprus for anyway, right? So why is FTX linking its firms to all of these firms and individuals known to be tied to fraud and at best highly questionable investment products? Why is it seemingly obsessed with building a monument or temple of fraud? A simple Google search would have revealed the history of these firms and individuals. Is it just an accident that FTX continues to acquire shady firms and do business with crime syndicates and oligarchs? None of this has so far been mentioned or alluded to by Ray. He just continues to refer to it as a disaster and a mess. But the question needs to be asked, why did he spend so much on obscure companies? Why register all of these exchanges in countries with weak or non-existent securities regulations? And how did Sam find these companies? Somebody was telling him this is the company he needed. You just don't find these companies with Google unless you're Googling fraudulent firms registered in Cyprus. I don't have all the answers yet. But we'll keep following down this rabbit hole for you and update you as more becomes known, more revealed. And honestly, there's some good fintech investigators after it. Got to give them credit. None of this is original to me. I didn't uncover any of this, but I'm just kind of condensing it and relying on the efforts of others. So props to Brains and Capital, Intel Jackal, FinTelegram, Dirty Bubble, CoinDesk, and of course, I must thank Sam for his efforts and his legacy. It's the gift that just never quits giving. Not going to lie, all of this is fascinating to me. This utter and complete devastation, wreckage, the mystery, the little intrigue, the little corruption, or a lot of corruption. So tune in, subscribe, like. Don't let Chunk or Tallulah down. Also, if you have some other questions or topics for further discussion, let me know. You can DM me at Moffin on Money. I do appreciate your time, and my time is up. I thank you for yours.